Hello, YouTube, and thanks for tuning in to the next installment of All Things Trading, the multi-part series that promises to teach you everything you need to know to become a master of the financial markets. And it's all for free. So be sure to subscribe. Now that we have discussed how to execute a trade, it's time to get into the when. And that cannot be answered without first understanding technical analysis. So let's get right to it. So what exactly is technical analysis anyway? Technical analysis is the examination of a stock's past price action in an attempt to forecast future price movements. The key word in that definition is attempt, and you'll see why in a moment. And although I mentioned stocks, this type of analysis can be applied toward futures, forex, crypto, anything really that is publicly traded on the open market. And it's used more for the short-term trader, your swing traders, your position traders, definitely day traders. Not really applicable to the buy and hold guy. And that's because your buy and hold investor is more concerned with where the stock is going to end up 10, 15 years from now, and not really concerned with the fluctuation along the way. So, what does this analysis look like? Well, it looks like this. Now, if this is the first time you've ever seen a chart, you're looking at this saying to yourself, what in the hell is all of that? Well, don't you worry, because by the time you're finished this series, you're going to be able to look at this chart and know exactly what's going on. But when you strip away all of the lines and all of the colors and all of the noise, you're left with something very simple. And that's this. The candlestick. The candlestick represents the price action during a specific time frame. And that time frame could be 1 minute, it could be an hour, it could be an entire day, whichever you prefer. It really doesn't make a difference for the sake of this demonstration. But understand that the candlestick is made up of a couple of different parts. One is the body, which is this part here. The other is the wick, which is this part here. Now, some refer to this as the stem or the shadow, whatever it is you want to call it. The information it's conveying will all be the same. Now, the very bottom of that wick represents the lowest price of the session. So if we're looking at a 5-minute candlestick, the very bottom of the wick is telling you what the lowest price was during that 5-minute time frame, whereas the very top of the wick is telling you what the highest price was during that 5-minute time frame. Now, your candlesticks are going to have contrasting colors. Now, I've got green and red here for the sake of this illustration, but it can be black and white. It could be, you can usually customize it however it is that you want. Just understand that the contrasting colors are going to vary in a very significant way. Your green candle is going to represent upward movement, where the red candle, or whatever the contrasting color is that you have set up on your chart, is going to represent downward movement. So, when it comes to the body of your candlestick, the very bottom of the body is going to represent what the opening price was at the beginning of the session, whereas the top of the body is going to represent the closing price. And because your contrasting candle is going to represent downward movement, well, that would mean the top of the red candle is going to represent the opening price of the session, and the bottom of the body is going to represent the closing price of the session. The information that a candlestick gives you will do you little good unless you understand the story that it's telling you. And in order to understand candlestick sentiment, you have to first understand that every single day the market is open, there is a fight going on between two beasts. You've got the bulls, who are buyers who are driving the price up, and they are in a vicious fight against the bears, who are sellers who drive the price down. The opening price, well, that's when the fight begins. And your closing price is when the fight is finished. What we don't know is what happens in between. And that's why I said it's an attempt to forecast future price movements and not an exact science. And you'll get a clearer picture of what I'm talking about in a second. So let's talk about the different shapes that these candlesticks are going to come in. You've got your long body, you've got your short body, and you've got all body. The longer the body represents more aggressive buying, meaning the bulls have shown up to party. Now, if these were red, it would be the opposite. That would mean more aggressive selling for a longer red body or contrasting color. Whereas the shorter body would represent consolidation for most part. Some of these candlestick shapes have names like the spinning top and the doji. Some characteristics of the spinning top are that they have a short body, a long upper and lower wick, and they're used to identify weakness in one of the combatants. Now, why do you suppose that is? Well, you have to understand the story the spinning top is telling you. The long upper and lower wick represents extreme activity from both fighters, but the short body represents little price movement from open to close. So these two beasts are beating the hell out of each other, but at the end of the day, didn't really accomplish much. And that tells me that one of these fighters are pretty damn tired. Now, the doji, on the other hand, has little to zero body, and that represents a standoff, or a stalemate, if you will. Now think about the last time you saw two fighters in the ring and it ended in a draw. Couldn't wait for the rematch. That rematch comes in the form of the very next candle. There's your doji, identified, fresh off of a downtrend. That's where your draw takes place. Well, there's your rematch in the form of a confirming candle. And what that's telling us, after the standoff, well, the bulls have now taken control. And as you can see, an uptrend follows. You also have your gravestone and your dragonfly. Some characteristics of the gravestone is that they have a long upper wick with no body and no lower wick at all. Whereas the dragonfly is the exact opposite. That has a long lower wick with no body and no upper wick at all. And both of these candlestick shapes are used to identify bullish or bearish reversals. Now, why is that? Well, you have to ask yourself the question, what is the story that the gravestone is telling us? Well, the long upper wick tells us that the bulls dominated the session in its entirety, almost, because at the very end, the bears showed up with their fresh legs and pummeled the bulls so bad it drove the price all the way back down to where it started at the beginning of the session. Now, that would make one think twice about showing up the next day? Or if they did, are they 100%? Who knows? You also have the hammer and the hanging man. Both have long lower wicks, little to no upper wick, short bodies, and are both used to indicate bullish or bearish reversals with confirmation. Confirmation being the rematch, if you will. Both are telling us the same story, that the sellers or the bulls dominated the session almost in its entirety, but not before the bulls showed up and beat them right back up to the price where it was at the beginning of the session. I've washed out the colors on these two because the hammer and the hanging man can appear in either color. So it's not the upward momentum that makes a hammer, nor is it the downward momentum that makes a hanging man a hanging man. What separates the two is where they show up in the trend. A hammer forms in a declining trend, whereas the hanging man forms in an inclining trend. Let me show you this chart to better explain. There is your uptrend showing us that the bulls have been kicking the bears' ass over multiple sessions, and there is your hanging man indicating that the bulls have gotten tired, and there is your confirming bearish candle indicating that now the bears have shown up to party. And a reversal follows. And here is a downtrend showing us how the bears have been kicking the bulls' ass over multiple trading sessions. And there is your hammer indicating weakness in the bears. And there is your confirming bullish candle showing us that the bulls have now taken control. Now, that is every bit of a spinning top as well as a confirming bullish candle. So this is where your judgment comes in. One may say, well, that spinning top tells us that the bulls have come back, but not necessarily in full force. And there may be some sideways movement, and you want to wait and see what the next sessions hold. Or green means go. And as you can see, uptrend follows. Now, opposite of the hammer and the hanging man would be the inverted hammer and the shooting star. Now, both of these will have long upper wicks with relatively no lower wick at all. Small bodies, and again, like the hammer and hanging man, are used to indicate bullish or bearish reversals with confirmation, meaning what is the result of the rematch. Now, again, these colors, the green and red, I've washed them out because they can be either or. What makes an inverted hammer is that it forms in a downtrend, whereas your shooting star will form in an uptrend. Again, here's an example. There is your downtrend showing us how the bears have been whooping on the bulls for what appears to be about a 3-week or so time frame. And when you are beating someone down for that long, it is only a matter of time before you start to get tired. And there is your inverted hammer showing weakness in the bears, and there is your confirming bullish candle showing that the bulls have now taken control, and your uptrend follows. And there is your uptrend, identifying how the bulls have stomped all over the bears for what appears to be the better part of a month. And when you are beating on someone that long, it is only a matter of time before you start to weaken. And there it is right there, the shooting star indicating that weakness, and your confirming bearish candle indicating that the bears have now taken control. And the downtrend follows. Now, before you go out there hunting shooting stars and put your entire nest egg into an opportunity the next time you see a doji, I've got to tell you, I can show you just as many examples of when this did not pan out. Because unfortunately, candlestick analysis is not an exact science, but nothing is. At best, you can hope to develop a strategy that produces more winners than losers. But in the beginning, I said it's not an exact science because we don't know what happens in between. We know when the fight starts and we know when the fight ends, but why is what goes on in between so important? Well, allow me to illustrate. What we have here is an all-body green candle. This is the bullish of candles. And let's say that this is a 5-minute candlestick that we're looking at. We know that at the beginning of the session, the price opened here, and 5 minutes later, it ended there. Now on the surface, this looks like the bulls showed up and just crushed it. And the bears, they didn't even show up to fight. However, it could be that at the beginning of the session, the bulls drove the price to here. But then the bears came back and drove the price right back down. And then the bulls come back again to drive the price there. And then you've got this ferocious buying and selling going on before the bulls drive the price back up, all within that 5-minute window. This paints a completely different picture. This tells us that not only did the bears show up, but they put up one hell of a fight during that 5 minutes and could make one of these combatants very tired for the next session. Now, when all of these shapes, the long bodies and the short bodies, the all bodies, the dojis, the spinning tops, the gravestones, the dragonflies, the hammers, the inverted hammers, the greens, the reds, whether it's filled or hollow, when all of these are put together, they form a pattern. And identifying these patterns are going to paint a much clearer picture as to what story the price action is telling you. Now, there are many, many, many candlestick patterns out there that can manifest themselves. The good news is that the majority of them are bullshit. And you only really need to know a handful of them in order to really become efficient. And we're going to talk about that in the next video. How to identify these candlestick patterns. So stay tuned. Thank you so much for watching. And don't forget to subscribe and hit the bell icon so that you can be the first to know when fresh videos are dropping. And please, if you felt that this information was useful, hit that like button. The split second it takes to do that means so much to me and my channel. And we will certainly look forward to seeing you again next time. And until then, stay profitable.